we go.
Your screen sharing has stopped.
Okay. That's it, yeah. The screen one. You can drag that one across. Yeah.
I won't be able to drag the graph.
Because
Hi everyone, thanks for joining. We're still just having a few technical issues, so we're still setting up. It gives you a bit of time anyway to get all your stuff together, and just as soon as we are ready and set up, we'll start. So,
people can get excited about the long weekend so long while we sort this out. Enjoy May Day as they put it overseas tomorrow.
Just for everybody that's joining, we will start at 10 past. That'll give you another few minutes, so just get yourselves ready. Apologies for the delay. We've had some, sorry, there's an echo. Sorry, there'll be a bit of a slight delay now till 10 past. Just give you an opportunity to get yourselves ready and a cup of coffee or whatever it is. And we'll be starting soon. We're just getting everything ready. Thanks.
See if you can find that one.
now that's looking perfect now.
Okay, so we seem to have licked the technical problems. We will be starting at 10 past. So those of you who've joined did make that announcement earlier, and we'll get going in a few minutes.
And can you guys hear and see?
Yeah, I can see you can see that's looking perfect. Your camera's working, the sound's working good.
Excellent. I'm going to just I can just. Okay, all good. Should we just give them a 2 minutes and start at 10 past, or should I go?
Yeah, so we're going to give them a couple of minutes just to.
We'll start at 10 past. I think most people are already in.
It's a weird thing. No, we're just talking about, just for the attendees, we're talking about whether I look into the camera or not. So just to bring some of the attendees into our world, we're sitting in Johannesburg in Rosebank, and to our right, lots of corporate buildings. To our left, lovely trees. If you come into our office, we've got a nice setup here. So I've got my laptop, I've got a second screen, and then in front of me here is a camera that I'm trying to clarify whether I should look into it or not. So it's that weird thing you get. Some of you know when you're on a Zoom call and you don't know when you look at the person, or even a FaceTime, you look at the person, but you can't always, should you look at them, or you're seeing yourself, or because you think of what they're seeing of you. It's stuff like that. So it's just normal things that all of us have to contend with. So yeah.
Okay, so thanks for that. It's 10 past. We're going to start now. Just by way of introduction, Jermaine Manick is not doing the presentation today. We're privileged to have Mr. Louis Botha, not the original one from the Avenue. He admits to being an attorney, I see. I don't know if everybody would. But today we're going to talk about cryptocurrency. And by the way, if you ever want to know if anybody owns cryptocurrency, don't have to worry, they'll probably tell you. So today we're going to talk about the ins and outs, the expert, Louis Botha from Latita Africa. And we will have a break, I presume, at about halfway, just to refresh and get back. I'll leave that to you, Louis. And as far as what we're going to be discussing today, I'm going to leave that to you as well, because I actually know absolutely nothing about all this. And I'm sure that those who have joined are only too interested to hear you. So, Louis, the floor is yours, and welcome everyone.
Thank you so much, Stan, and thank you to everyone for indulging us for those few minutes. We're very grateful that so many of you are joining us this afternoon. Maybe just to give you a bit of background regarding our preparations, we were mindful that it's a Thursday afternoon. This is probably the shortest work week of the year, and so some people have planned their holidays around this, or some people might have done a long weekend before, starting tomorrow, and so this one is right in between. So we're really grateful that you've decided to join us, and because we show our gratitude, what we've done is we've tried to make this really as interesting and as engaging as possible. The what we're so fortunate for is that crypto is getting an enormous amount of attention around the world. So there's a lot we can talk about. If you're like me, if I can, maybe I can say the most recent thing. If you're like a millennial like me, you might have seen that. You might have watched growing up, watching a show called The OC, and I was quite a fan of it. But the reason I mentioned is because one of the actors in the OC, a guy by the name of Ben McKenzie, just brought a documentary last week about the risks of crypto investments, and where he basically takes the position. I haven't watched it, but I'm just basing it on the name and the trailers I've seen, where he's basically saying that his concern is that people are losing money, and so it's a really dynamic field at the moment. There are a lot of questions around this. And so what we've done is we've tried to make this interesting as possible. In the course of the presentation, we're going to do a couple of things. We're going to play some YouTube videos for one, some entertaining, some educational. What we're also going to do is we're also going to use some nice live examples. So we were very fortunate. One of the cryptocurrency exchanges was kind enough to provide us with a template documentation that we can use to illustrate some of the how in real time you would be able to assist your clients with declaring the taxes correctly, doing calculations, etc. And maybe just the last thing before I actually start going to the slides is that we've tried to pitch this very much for accountants, and bearing in mind, I would say two factors. I think the first factor is that accountants are a bit like, I was telling someone, they're a bit like the GPs, the doctors of the financial profession. Everyone has one. Well, if you do business, almost everyone has one, and so they are your first port of call. And so what we want to do today, but obviously, as important as your role is, no one can know everything, and we know that you work hard, and the fact that you're here today tells us that you take your job very seriously. So what we want to do today really is to equip you with the information that you need, that we believe will help you help your clients. So what we are going to do, and the second thing, so that was the first thing. We want to really push this for accountants. What we believe will equip you to assist your clients. The second thing is that we are mindful that some of you, there may be different levels of experience and exposure. So because of that, we've got slides here. I've got slides here prepared, which we'll talk through. But we want to invite you, and you'll see what we've done, the way we've structured the presentation is to have Q&A slides sort of towards the end of each section. but we want to encourage you to please feel free to ask questions even before it gets to that. The chat function, I think, is open. So if there's a question, throw it in there. If we have to take this one section and have just a discussion, because maybe someone has an interesting case, a live case going on, and they want to obviously, anonymously protecting confidentiality, they want to maybe share something, they want to ask a question, then I might assist them, then that assists everyone. So please, don't see the Q&A as something rigid. The Q&A is something to facilitate the session. It's a Friday afternoon. It's a long weekend tomorrow, and we're grateful that you're here. But we want to help you keep you engaged. So if you help us, we can help you even better. Well, I can help you. Okay, so I'm gonna get going. So this is broadly the outcomes that we're going to discuss. We're going to talk about SARS classification of crypto assets. Technically, and sorry, the purist in me always has to say that when we say SARS classifies them, SARS enforces the law. All right. So in practice, what happens is Treasury, the very smart people at Treasury, they make the laws, they write policy. SARS, in fact, actually just has input on that, but they enforce it ultimately. So that's the first thing we're going to do. We're going to talk about distinguishing capital versus revenue gains. This is something that I'm sure all of you are very familiar with. Everyone wants a gain to be a capital gain as opposed to a revenue gain. Revenue being at 45%. When we talk about income tax, capital gains tax always going to have a maximum effective rate of 18%. I will explain a bit about that. You probably know this, but for those who might not know why I'm saying 18%, we'll touch on that too. We're going to help you regarding record-keeping requirements and documentation. So as I mentioned, we were very fortunate that one of the crypto exchanges, one of our large exchanges, provided us with this lovely template document that we're going to show you, which is very handy for record-keeping purposes, so that you're able to, you can assist your clients in improving and showing that they have declared their tax correctly, or if they receive questions so that they can answer them. Then we're going to go on to touch on the tax treatment of common crypto activities. So maybe just a disclaimer on this is that this is very niche. So again, here we are mindful that there are attendees of different levels of experience. So if I talk about the fork, some of you are going to think, fork and knife, and you'll be right. But if I talk about mining, you might think about, your shares in Amplat or Volterra. It's not that. It's not something a little bit different. It's something specific to the crypto space. So, but what we're going to do, these are complex things, and they can happen. They can happen to your clients because some of these activities, like mining, for example, requires very much intent, and it requires planning and that, and there are. If you go and read the news about where they have mining farms and that, it's a whole thing. But the point being is that we want to add value, but we don't want to introduce unnecessary complexity. So I think especially in that one, we really appreciate your questions. What we were able to find is you've got a really nice explainer on forking, which we came across, the cryptocurrency website, or a website rather, that explains how crypto works, which will play to you, which gives you a bit of context. And then lastly, we'll touch on the reporting obligations, risks, and SARS enforcement. I think that speaks for itself. Okay, so right. So what we have here, we have this short clip here from it's a John Oliver video. So I think Daniel, you're going to play this, or do I play this? I'm just not sure.
I think you can play. Just click select and see.
Yeah, let's see. Oh, it's going back.
Is it
no,
not?
I can't. Can you try playing it, please?
I need to open up the notes.
Sorry, because I can't seem to cut and paste. If you can cut and paste it maybe into the chat and then play it.
Yeah, so I was just busy sharing the notes. So everyone, I just shared the link to the notes in the chat group. Let's just let me open it
And maybe for
again, and then
everyone's
I'll.
benefit also, oh, sorry, Danny. Maybe for everyone's benefit, we know you're here for 3 hours. So if you're gonna listen to me for 3 hours, you're gonna get tired of my voice. I'm gonna struggle to keep up, speaking nonstop for 3 hours. So we've got these little videos here also, again, just for a bit of variation, just to hear someone else speak about the topic and so on, and to help give a bit of color to the interesting world that is crypto, and more importantly for your clients, how you can help them navigate that from a tax perspective.
It also wasn't letting me. Let me try again.
Okay.
Okay, hold on. I need to share my screen. Hold on.
No problem. Awesome.
Okay, is everyone seeing it?
Not hearing it.
So maybe just a disclaimer for everyone. There might be some, if there is some profanity, we apologize. It's not. It's something that we can't obviously cut out. So those who are sensitive to that, we're mindful, and please just be aware of that some things might be said that might not be appealing to sensitive viewers and listeners.
Danny, is the sound on?
Can you hear the sound, Louis? Because I can hear it on my side.
I
No, I can't hear on
can't
my
hear it.
side.
Let me
No, I
press
can't
play
hear it
again
either.
and see. Did you hear,
No.
No.
Louis? No, didn't hear.
No.
Let me check again.
Okay. Then if we can't get it now, we can also play it later, and we can give you time to play around with it in the background. But it is a nice video if we can play it.
Yeah, everyone else is saying that the video stutters and there's no sound.
Okay.
Okay, the notes are the link is in the notes. We'll
In the
come back
notes,
to it.
yes.
Maybe in the
Yeah.
break, I'll test it out.
Yeah, that's a good idea. So maybe I'll just touch there. We put in that quote there. The key software to create a coin is open source. Obviously, open source is not a tax specific thing, but open source refers to programming, specifically code. So if you open source is a big thing in the crypto space, because blockchain works on open source. If you are interested in AI, it's also a big thing that you might have heard, is that the whole thing around open source. And you might have seen the other day that what is it, Anthropic accidentally shared some of their code, which they then said, it's gonna be an open source, it's fine. So yeah, but okay, we'll move on to that. We'll come back to it. But the bottom line is that crypto is everywhere. You get hundreds of different coins, and that everyone can create one. You've seen the US president; he's got his own coins. There's Dogecoin which of course Elon Musk has funded quite a bit. So it's a very, very interesting and dynamic world. So in terms of if we come to the tax part, so the phrase, so in the Income Tax Act, there is from the principle of a financial instrument has existed for a very long time. That definition is an extremely broad definition, and that's how they describe. That's how crypto assets, to be specific, are described. And why do we use the term crypto assets? It was cryptocurrency, but crypto assets encompasses something a bit more broad. Crypto assets include, for example, NFTs. Most famous NFT you might have heard of is actually, or if you're wondering what an NFT is, the very first YouTube video was one of the first NFTs that was sold. They actually, what they did, literally what's supposed to happen with the NFT is that you buy it. So someone bid it. It was bid at an auction and someone got it. It's a boy standing and he's explaining, he's looking at animals or something. But it was bid at an auction, won, and so it was removed. It was removed from YouTube. It's not available anywhere else. Only the purchaser, the person who won the bid at the auction, they have that. Okay, so but financial instrument, that's very important. That it's financial instrument and not currency for tax purposes. Why? Because currency is money, it's cash. So in a tax perspective, I'm not going to go into all the detail of the financial instrument definition because it's quite expansive. So if you look across the Income Tax Act, you'll find it in a lot of different places. Maybe the one place for you that might be of interest is if you look at something like trading stock. So trading stock, and accountants, I think are probably the best when it comes to will probably best understand how to deal with trading stock from a tax perspective, because what they've done in the Income Tax Act is that the tax principle largely follows the accounting principle. So you've got your closing stock, starting stock, inclusion, exclusion, that principle. But crypto, because it's a financial instrument, does not apply to trading stock. Rather, the trading stock provisions do not apply to crypto because crypto is a financial instrument, right? So that's an example of the importance of the financial instrument definition. The other important one is the effect of it not being a currency is it means that currency, there are specific provisions, but it means that if you sell something and receive crypto in exchange, there can be tax consequences on both ends. Both parties would have a disposal, right? So both parties would have to determine did they rather said the person purchasing with crypto, whatever form of crypto that may be, if your transaction, and if the Income Tax Act applies to the transaction, then when you purchase with crypto, that purchase in and of itself results in tax consequences, which could be a gain or a loss, etc. Right. So that's a key distinction. As a matter of interest, there are countries where crypto is a currency. There's, for example, I think El Salvador is one of the oldest, and I think there are one or two countries in Africa also that accept currency as fiat currency, but we don't. In South Africa, we don't, and that's very important for tax purposes. And then we're also going to touch, and then also important from the SARS perspective, is the different type of activities. We've touched on trading, buying and selling on one of your exchanges, your Lunos, your Valas, OVEX. There are many. You can be on Binance, whatever the case may be. Mining, of course, that's the actual activity where you are trying to basically, I'm not going to use the right word here, but you're trying to break the code so that you unlock Bitcoin, for example. So Bitcoin and Ethereum, for example, work different in their trading and mining. Different in terms of their mining approaches. One thing, for example, with Ethereum is that, and I should disclaim, I'm not a trader myself, but one thing with Ethereum, for example, is Ethereum, I think, have started, or maybe they completely use only staking. And the whole thing around using staking is because energy use. So mining is, of course, an extremely energy-intensive activity. It draws a huge amount of resources. If you live in Johannesburg like me, you don't want to have more water issues. So you don't want too many miners, crypto miners around. Staking, like I mentioned, forking. We'll show you a nice video just now, so I'm not going to go into that. Airdrops is basically like a little bonus. And then I touched on NFTs, that YouTube video. And then because of how each of them operate, because we have to apply the general principles to crypto transactions, the tax treatment for each may be different. Okay, so maybe just something to say before I go on to this next slide. is that a lot of people, and I remember when I first started seeing clients around this a couple of years ago with crypto arbitrage, and crypto arbitrage was a big thing. Is that people tend to think it's maybe a little bit like the there's a if you follow the news, there's a whole discussion around creators, and that, should creators have to pay tax, right? Should they be paid? Should they have to pay tax on their income that they generate from their followers and that kind of thing? You might have seen that discussion. So people tend to look at that and they say, well, no, you shouldn't pay tax because of this. But like that, crypto is the same. Crypto is maybe the original one. The general principles apply. It's the same act, same piece of legislation. It's income tax, it's value-added tax, it's donations tax, and what else? Capital gains tax. So the same principles apply. But what has happened over time, I'm not going to bore you with the history today. You're welcome to ask a question in the chat if that's something that you're interested in. But historically, what happened is that there was a little bit of catch up that had to take place, where phrases were brought into the tax legislation to deal specifically with crypto. So, for example, financial instrument to include crypto as a financial instrument, they did two things. One, they created the crypto asset definition, which I think is there, and then they included crypto assets in the financial instrument definition. So that's essentially how they solved for that. Okay, so I've touched on the financial instrument definition. I'm not going to go through it again. Capital v revenue, that's probably your bread and butter as an accountant, and it's the oldest standing tax question probably. If you go back to the 1900s and the earlier tax acts, and that before the tax legislation became as complex as it is now, you had an act in 1941, and that, of course, now you've got the Act 58 of 1962. But in the older legislation, everything was capital revenue before they started bringing all these rules and that, which unfortunately have made your jobs a bit harder, perhaps, but at least more interesting also. So capital revenue, that's your bread and butter. We're going to get to the requirements of that just now, but at a high level, of course, is that if your client realizes a capital gain from the disposal, from the sale, so I use the phrase, the purist in me, I use the phrase disposal instead of sale, because disposal is something a bit broader. So disposal is something broader than just selling it. And in the crypto space, that's actually quite important, because an airdrop, for example, you just receive it. So there's no disposal in that case. Or a fork, when the code splits, which we'll show you later, again, it's not a natural disposal, it splits, and so now you've got two assets instead of one. So disposal, it is important that we say disposal as opposed to sale. Just touching on the ring fencing of losses, what that is about, and I mentioned that because it's actually something that probably comes up a lot in your context for individual taxpayers, is that we have this provision, section 20, capital letter A, in the Income Tax Act, which deals with the ring fencing of income tax losses. And basically, what it is about is, it says that, what they say is that if you're trading in crypto, then your losses cannot be offset against your other income. It's ring fenced. It's a ring fence because, and I think when they brought it in, crypto was seen as the word they use is a suspect trade, which is maybe not appropriate, but because it's not always suspect, but that's the word they traditionally used. They said, these suspect trades. So, for example, if you look in the act, you've got other types of suspect trades that are also listed there. So it's if you buy and sell crypto, if you make a loss on crypto, it's ring fenced. You can only set off future gains against that. That's an important one for your client, and I can say from experience, I've seen audits in that regard where they look at this, because let's say, for example, I'll take myself. Let's say, for example, I earn a salary of 1 million rand, and I was I was a bit too brave maybe in the year, and I bought and sold too many crypto, and I made a loss of 400,000 rand, for example. Now, if I can set that off, obviously from 1 million to 600,000, that would be a significant tax saving if I'm able to set that off. But what the legislation says is no, we cannot ring fence. Sorry, you cannot set off the crypto loss against your other income. It's a ring fenced. So if you have that loss, you must use it. So to use the crypto, you might have to buy some more if you want to derive the benefit from that. Okay. And like I've said, general principles apply to unique crypto activities. I think that's probably the most important thing is if you have a client that comes to you and they tell you about crypto, and maybe that's happened to you before. I think this happened to me initially when I was introduced to this. You might think, oh, what is crypto? I haven't seen this. The general principles apply. So that's your starting point, and then you go into some of the more specific provisions, some of which we touched on, like a financial instrument definition, and some of it we'll still get to. Okay. Value-added tax is an important one. Your clients might not come across it so much, but I think it's an important and interesting one because this is actually a big year for that. I think if some of you are interested in following the budget and the history of that, we've had some pretty bleak budgets over the last 10 years. Different descriptions have been given by different people to describe what we've been through as a country. And I think budget day was something that was generally, what's the word? No, not feared, but maybe dreaded because people thought, oh, we're going to get more tax raises and that. And this year, we got relief. And I think the LinkedIn, in my opinion, it's probably the most important one because for a small business, and again, I think you as accountants are probably most aware and
cut
see
out for a
this more than
second.
any of us. For a small business, yes, there's a VAT element. Hey?
Just repeat that point because you cut out halfway through.
Small business, having to account for VAT at 15%, is one thing because it's difficult from a. Danny, do you need something from me? Or am I?
No, I was just saying your previous point. We cut out during the mid sentence. I don't know, and now I've lost the presentation. I don't know what's going on. Sorry. So wait, Louis. Wait. Okay.
In your life. So you've got so the 2.3 million rand raise, I think is significant. It comes in the crypto context, where you're dealing with so-called with the supply of cryptocurrency. And I use the word cryptocurrency. I should have said crypto asset.
Louis, just wait a sec. Wait a sec.
What the VAT Act says, and this is all you need to really know about this. What the VAT Act says.
Just wait.
Sure. I'll wait.
You cut out and your presentation's closed. So I don't know if you need to I don't know where we got up to. Just to repeat the point because it cut out and so I don't know.
No problem.
I'm just trying to see
which one, Danny.
Okay,
so let me go back. I'll just touch on it broadly. What I was saying was, okay, I'll just touch on value-added tax. I'll just summarize it. So this was a big year for VAT. It's a big year for small businesses, I think, and although VAT is something that may be less likely to come across your desk, and I'll explain why. In the crypto context, the 2.3 million rand threshold change was a very big one, and so with that as context, just two principles for crypto in the VAT context. The one is that of course, when we talk about VAT, whereas in the income tax context we talk about disposals, like say disposals. in the VAT context, we talk about the phrase of supply. So it's a supply of something. A supply triggers the VAT liability. Sorry, so a supply of something creates the obligation to account for that. And in the crypto context, what's important is that where we have the Income Tax Act, which says that crypto assets are financial instruments. In the VAT context, crypto assets are, or the supply of crypto assets is seen as a financial service. The practical implication of that is that when you're supplying a financial service, like a bank, you do not account for VAT unless you charge a fee. So only if you charge a fee do you account for VAT. And in the bigger scheme of things, the practical importance of that is input VAT. That's the main thing. Input VAT is going to reduce your VAT liability, and maybe you're lucky and you even get a refund. An interesting case that you might have seen was that 2 years ago, just on financial services, is maybe a constitutional court case involving Capitec, where there was an issue about certain insurance products that Capitec had supplied, and there was a question whether they could claim the input VAT on that, because insurance is the supply of a financial service, but they charge it at a fee. So it's a complicated set of facts, but Capitec won the case. SARS promptly went and they changed the legislation. So they changed the definition of insurance so that that's addressed. So we can probably see more of that in the future. So that's value-added tax. Unlikely, I mean, it's possible that your clients start charging fees for crypto assets, but I don't think it's something that might come across that will necessarily be that common in the context of sort of, if I can say, individuals and small to medium-sized businesses. Just moving on to the next slide. Okay, Q&A. So
just reshare your slide again.
If there are questions. Oh, sorry. Apologies. Oh, did it stop sharing?
Yeah.
No worries. I'll just share it again. There we go. Okay. Sorry about that. Okay. Why is it not? Okay, there we go. All right. So question. So Danny, maybe if you can just explain to our. All right. Sorry about it. Where is it now? Oh, wait, let me put this on the screen here. Sorry about that. Sorry, everyone. I think I figured out the issue. Okay, here we go. Danny, you got it there?
Perfect.
Cool. Okay. Q&A. So, Danny, if you want to maybe explain just how the questions work, we're going to use the chat function. Yeah. So maybe I'll start off with the first one. So maybe I'll pose two questions perhaps. So I think if there's someone who's come across an interesting case, maybe I'll share one about crypto arbitrage first. So crypto arbitrage. The question, of course, so what is crypto arbitrage? Crypto arbitrage is the practice where, let's say I have an account on Valor. I have an account on Valor and I have 100,000 Rand to burn. And I want to make some quick money. And what I do is I take the 100,000 Rand and move it offshore to a foreign crypto exchange, like a Binance, for example. On Binance, I buy Bitcoin. I then bring that Bitcoin back to my Valor wallet in South Africa, where I then sell it immediately. Now, the arbitrage, the phrase comes from the fact that there's always, and I don't know the exact economic and financial reasons for it, but there's always a slight difference because of how the exchanges work and the Rand dollar exchange rate, or the Rand. I think with other foreign currencies too. Because of the exchange rate, there's always a slight gain that you can realize. So what some guys do is they'll sort of time it. So they'll buy.
We've lost you again, Louis. I don't know what's going on.
So maybe my first question would be, if someone is realizing profits from crypto arbitrage, do you think it would be on capital account or revenue account? Maybe if someone wants to take a stab and answer that in the chat, and then please go ahead with your own questions for that. Manny, do we have anything in the chat?
Nothing at the moment. There's someone asking about revenue.
Revenue, yes. Warren, I agree with you. It's definitely revenue. That's yes. I see. It's Warren Westhuizen. Warren Westhuizen is dead right. That is revenue every time. So in the same vein, if you have a loss, I mean, it shouldn't happen with arbitrage, but if you have a loss, ring fenced under section 20 cap A. Usually, then you've got to set it off against other gains. Any other questions from anyone on this? Can be anything. I mean, it doesn't have to be tax related. Even we can even talk a little bit about financial regulation and that. I'm going to give 30 seconds, and then maybe let me give 30 seconds or so for people to just maybe think about if they want to ask something. And then what I'll do is I'll throw in something else that we can think about. Is it not, John? Yeah. Sorry, guys. The sharing function today is not our friend. It really isn't. So sorry. There we go. Oh, there we go. Sorry about that. Q&A. I'm gonna give it 2 minutes. I'm gonna give 2 minutes and wait for someone to ask a question. See if there's some questions. Anything, like I say, anything. Like I say, this is whatever question you ask, you are going to benefit. Danny, I think 20-something people you said you're going to benefit everyone. So really, please.
We currently have
ask.
48 in, but
yeah, please be. $48. Well, even better. All right. Okay. Oh, there's a question from Warren. Okay, let's. I have a client. Danny, could you maybe read the question? My screen is a bit small, so if you can maybe read the question, and then I'll respond.
Okay, I got two. Like, I have a client who does high frequency trading but does not get statements. SARS has requested documentation, but the so-called report is 50 pages long. How do we satisfy SARS? Yeah, how do we satisfy SARS?
Yeah, that's an excellent question, and it's actually something we're going to touch on in the next sessions. But I think it's a lovely. I think we can use as a segue to that. So I think the first important thing is that when SARS engages you, so the first thing is, and I'm sure you tell your client this, don't be scared. Don't just be. SARS asks a question. SARS can ask a question. SARS can ask a question. It's normal. SARS just because you're getting audited doesn't mean you did something wrong. That's generally my view. That's generally what I tell my clients. I said, because you're being audited doesn't mean you're doing something wrong. It's just the SARS risk engine picked up something they want to ask you, or whatever the case may be. It doesn't mean you did something wrong. Okay. So in terms of satisfying SARS, so I'm going to be a little bit technical here. I wonder, Warren, would you be willing to tell us the context of the question? So what I mean by that is, typically when you submit an income tax return, you get that verification request. Often that's like automatically generated. So that's often the one context in which these questions can come up. So you submit the return and then you get the questions. Okay, so you get screen printouts. Okay. All right, so it's in that context. So screen printouts are good. So the test for tax purposes is Tax Administration Act talks about the burden of proof. It says the taxpayer and graphs. Those are both excellent, Warren. Those are both excellent. So it's all of just about how one uses those printouts and graphs. I don't have it ready immediately. I'll get it ready during one of our breaks. But we were very lucky. Valor sent us an example of their trading statement, which shows the exact values on certain trades. So the first thing I would say is that depending on which exchange he's been using, ask the exchange whether they can provide more detailed statements. Maybe something interesting I can share is that in our preparation, we asked Valor whether whether they could do a little video for us about Coinly. So Coinly is an application which allows you to take your any crypto account. So it's Valor, and I mentioned Valor just to say we asked them, they did it as a gesture, but it's simply that we were lucky enough. We sent an email, they responded, and they helped us. So that's the context in which it arose. But what they did is they actually explored.
Okay, you stop. You can't hear you.
Clients trades on the app. So in other words, the app basically takes the information, as I understand it, app takes the information and produces it in a form that is more easily understandable. So Coinly would allow you to do that. So Warren, in your client's case, perhaps I think and I assume your client doesn't have that. I think so let's assume they don't have Coinly, right? I think the next step would be to ask the crypto exchange for the information, because if they have like a summary document showing the trades, I'll show the Valor trading statement just now, something like that. And I suspect that if Valor has it, the other exchanges, at least the local ones, should have it too. We've got our fintech is really strong in South Africa, so those guys should probably have it too. Your Luno, OVX, the other guys. They want 3 weeks and 6,000 rand. Okay. What do you mean by the 6,000 rand? If I can ask. They want to pay 6,000 rand. Oh, geez. For a detailed statement. Okay, Warren, I think I'm not going to ask you which exchange it is because I don't think that would be fair. But that is odd, I would say. So maybe the next step there for bin something. Okay. So Warren, so the next step there is, did your client when he did the trades, how many of the trades involved cash movements? In other words, cash movements in and out of his bank account, or were they between crypto assets? If you don't know, you can say you don't know, and then I'll just discuss both scenarios. I wonder if Warren still there, because Warren's helping us a lot. Okay, let me maybe go ahead and I'll discuss both scenarios. Oh, cash trade. Okay, great. So Warren, in that case, you can use the bank statements. The bank statements can be very handy now. Now, obviously, when it comes to bank statements, yes, there might be the issue of the descriptions, but we've seen cases. The bank statements are very important, and I mean, SARS is using them a lot more. SARS is asking for them a lot more because of their efforts to bring more people into the tax net. You've got a lot of these, when you call them sort of bank statement audits, where they believe someone hasn't paid any tax and they just ask for the bank statements. And sometimes it's a bit unfair. I must say, I think they are often in those contexts a bit heavy-handed, because it's my concern, if I can put it like this, my concern sometimes is that the SARS approach is, we will use the bank statement, but you can't use the bank statement. Now, I don't think that is legally correct, because the Tax Administration Act says you carry the burden of proof, but it doesn't say what form of burden of how you must prove it. So you can use different ways. So the bank statement you can use, provided you can substantiate it. So in your case, Warren, and maybe I don't want to take too much time with this further, but thank you for the question. It's been extremely helpful. But maybe the best idea in this case is to do a combination. So to look at the bank statements and the screen printouts and graphs that you have, and to try and explain how what is. I see profits are better in crypto. Okay, that we can manage. Maybe I'll touch on that. So if the profits get better in crypto, yeah, that's an interesting one. So what will happen is that if he's with a specific exchange, what is ours? Oscar. Okay, Oscar, I'm going to finish the Warren's question quickly, and then I'm going to get to yours if that's okay. But Warren took the plunge. I just want to honor that. So Warren, just to finish your question, finish on the point. If it's better in crypto, my suggestion there would be ask the exchange or determine from the exchange if they have a history of what the value was of a certain crypto asset on a certain date. I know, for example, this is just purely by chance because I was playing around on the Valor website. Valor has a live amounts for all of them, and because so you can see what the different crypto assets cost. So that'd be my suggestion. That is something that I think they should have histories to show what was the value of the asset on a certain day. And if there was an intraday movement, then you've got a bit of leeway. You can decide. I think you can argue that that a lower value should potentially be used if there was intraday movement. So that would be my advice. It would be so one, combine the screen printouts, explain the profits by using the bank statements. So you highlight the ones that are relevant, use the screen printouts and graphs supporting documentation, and in terms of the calculation part, where the receipts were in crypto, for those, what you could use the screen printout and then ask the exchange or determine from the exchange whether they have a page reflecting what the value of that was, what the value was of that crypto asset on a particular day. If you were trading in Bitcoin, you can almost certainly find it. Bitcoin is like it's quoted in all major currencies, including the rand. So if they are trading in something like Bitcoin or Ethereum, one of those popular Solera maybe also, they should be able to get that. Okay. Thanks again, Warren. That was very, very helpful. Oscar's question. I had audits with, so okay, let me try reading it, Danny, and then if everyone can hear, then I'm happy to go ahead. Oscar says, I had audits with SARS regarding crypto. They wanted to tax him on the drawings, cashing of his money. And they used the bank and they refused because they needed it. Okay. So what they're saying, Oscar, what my understanding, what they're saying here is they're saying the bank statement is not enough. They're saying they need third-party documents to support the bank statement. Now, like I say, the Tax Administration Act doesn't say, it says yes, you've got the burden of proof. And yes, there are cases. I think the Lutsky case is one of the better known ones, and I can't remember if he was trading crypto or futures or what, but there were also documents that they didn't accept. So the question is to just find another way to support it. It could even be an affidavit. But the bottom line is it's important that they can't simply reject it because the bank statement, in my view at least, works both ways. It shows, SARS like to use it when or SARS try to use it when there's income, right? So they want to use it to show all these income amounts, but then for the deductions they want these extra documents. So I think my advice would be the suggestion would be follow the same process that you followed that I suggested for Warren's client. So in other words, try to get the screenshots. In Warren's client's case, there's the graphs, printouts, and that. If see if the crypto exchange can provide a statement, maybe cheaper than the other one that Warren referenced. But then if not, anything else. I mean, to give an example, because if you think at its core, and I'll say this, and then I think I'll move on. But at its core, a crypto transaction is a contract. it's a contract. So we've even been involved in cases where, because of, I mean, our economy has changed. So not everyone has large, ERP Sage systems and that, and people often use WhatsApp more than they use email. And so we've seen cases with the clients where the client tells us, I don't have, all the transactions. I didn't do all the invoicing because my business is informal. This was not a crypto case, different case, but business was informal. But what I did have, this is a client telling us, what I did have is WhatsApps. I negotiated with so and so on the price of this item, and they said, and there's the price. So we use the WhatsApps, and they should accept it as long as the WhatsApps support the supporting documentation supports what's in the bank statements. That's what you're looking for. Yeah, that's a good point. I'll read it quickly, but I think it's a very good point, Oscar. Uh, Oscar says, but I think SARS officials need training and understanding on the subject they are auditing. I ended up getting someone from SARS who understands, and matters were solved. Very kind of you to say, Oscar. Thank you. Maybe on that point, I can say that SARS has a special high risk unit, or they've said in the press that it's an asset they're targeting. They've got people involved. I do know that. So last year, I'm not sure which professional body all of you guys would be part of. Probably, I imagine more of you, SAICA or professional accountants. But if you remember of SITE, for example, SITE is the annual event at the Tax Indaba, and last year the Tax Indaba, there was a session on crypto, and they had someone from SARS there, and this person, and I can't remember the individual's name, unfortunately. The individual, he was the SARS representative speaking to the tax issue. So there are people, Oscar, maybe just to give you a bit of hope. There are people who know. There are people who are getting training. I didn't see what the allocation to SARS was in this year's budget, but I think it will get better. But I hear your point about training. I think that the key thing is, and then I'll stop that and move off, and then I think we should go on. I think the key thing is, if you're dealing with someone who does not appear to have a sufficient level of training, and I know you've got all of you probably have a lot of clients, and that try to keep things as simple as possible. So if you submit documents, for example, mark your attachments, that kind of thing. We sometimes try to draw a circle, line across, that kind of thing. Because if you get someone, because it does unfortunately happen, or it does appear to happen, that sometimes you get people who don't engage, and you're not sure why. Maybe they're under pressure, they've got to get the assessment issued for KPIs, I don't know, or they have a tough manager, and you submit your documents day one, and day two you have your assessment, and you can see that they haven't engaged with it, and that's frustrating. In those cases, that's why you've got the objection and the appeal process. But I think the key thing is, give as much detail as you can, because and that's probably some of the best advice I can give you in an audit context from my own experience, is that do the hard work up front. Do the hard work at the first submission. If your client has time, if you have time, get them, give you the documents, give everything. Because what it shows, well, two things. Firstly, the work is done. So if they still go ahead and issue the assessment, when you object, the objection is way easier to draft. The second thing is that what it shows good faith. If you come forward with a lot of supporting documents at the beginning, that the SARS auditor or whoever SARS is looking at it, they have to acknowledge that you know what you're talking about, and they have to take it seriously. So detail is always, bearing in mind you don't want irrelevant information. That's also important. But if you can give detail, do the circles, do the highlighting, number the pages, do that stuff, because it does make a difference. So yeah, okay, I'll leave it there. Thanks again for everyone for that engagement. Oscar,
there's two more other questions. I think they're quick ones though. There's one is saying,
yes.
Is capital gains loss on sale of crypto also ring fenced? And then the other one was, can an auditor verify crypto assets, or how can an auditor verify crypto assets?
That's interesting. Okay. What do they mean by verify? The existence or what exactly?
Yeah, I will
So
ask.
maybe let me say, so a crypto asset is held in a wallet, right? So that wallet can typically take two forms. So either you've got a wallet that's held on the, well, such a conceptually, it's such a weird one. So you can move crypto in two ways. If you've got it on a wallet in the blockchain, it moves on the blockchain, right? Which is here. This is the blockchain. It exists on the internet. That's it. The other one, of course, is if you've got these sock wallets where it's a crypto. Sorry, to me it looks like a flash drive, which you carry with you in the crypto. There's a guy, and I don't know his name unfortunately, but he's doing his dissertation. He used to got his name now, but he's doing his dissertation on this whole issue about crypto and the wallets and the SOC L and that. So verifying it, they would have to request it, and I'll touch on this, but we're going to come back to this later. But the recently announced changes on exchange control, which are contained in what's called the capital flow management regulations, they are probably going to play an important role, because in terms of that's a capital flow management. Exchange control is specifically about cross-border, but they're going to be given certain, well, the draft regulations give them certain powers. But in the tax context, well, yeah, the way they would verify it is they would ask for the. I mean, if you're on an exchange, then they're going to ask for that information. They can ask the exchange also. That's an important thing to. Even though we don't have third party reporting, as I understand, for crypto exchanges yet, they can ask a third party. So if you look at Section 46 of the Tax Administration Act, which deals with requests for relevant material, so they can ask you as the client, but then they can also ask a third party. That's how they get the bank statements. Typically, they ask the banks to provide them with the bank statement. So sometimes some of you might have been involved in cases where you don't give SARS the bank statement, they give you the bank statement, and then they've obtained it from the bank directly under that section. So that's typically how they would do the verification. And the loss one, I'm pretty sure that I don't think it's ring fenced. So the rules for capital losses are a little bit different. They depend on whether you're I think a connected person. There are what they call clogged loss rules, but I don't think it's no. I don't. To answer your question, no, that loss isn't. But it's a nice question, because what it illustrates is the concern that SARS has. The concern is abuse. If you abuse, essentially. Because going back to my earlier example, 1 million rand salary, 400,000 rand losses. If I know that I can just wildly trade, crypto, then I'm going to be much less risk averse. I'm going to take chances and that, because I know I've got this income here which I want to, I want to reduce. So that provision, actually, the 20 cap A one, actually, they proposed an amendment to it in the budget to make it even stricter, because what they were seeing is I'm not sure if it was abuse, but unintended consequences, because I can mention maybe one of the requirements on the Section 20 cap A provision is that a part of your income has to fall in the top tax bracket, so the 45% tax bracket. So what the provision, how it worked, and it still does, but the amendment, only once the amendment passes will it change, and if it passes. But what it says is that only if you earn any income in the top bracket, which I think now is 0.7, 1.8, I can't remember exactly, but only if you earn income in the top bracket do these rules apply to you. Crypto is a bit different, because it's an automatic suspect trades one, but maybe they are. That's just to explain the difference. So capital loss, no, it's not limited unless one of the other, what we call clogged loss or ring fence loss provisions apply. For example, selling to a related party. So let's say you have crypto and sell it to a trust of which you're a beneficiary, or your kids are beneficiaries. You sell that crypto to the trust at a loss. That loss is ring fenced. Only if you sell something to that same trust can you, it's ring fenced between the parties in that case. So that's one example. There are a couple of others, but that's one example. So, yeah, so the answer no, other rules apply. Yeah. Okay. All right. I'm going to move on to the next one. Guys, thanks a lot for the questions. It makes it a lot more. There we go. Okay. So we've already touched on a lot of these things. I don't have to. I'm going to go on them, speak about them broadly. It would actually be nice. Is the break after this one? I think. So I think, okay, guys, I think what I'm actually going to do, I think actually a good time now for a break. We've gone for an hour. So what I'm going to do is, if you can just give us a few minutes, I've got the valid trading statement, which I'd like to use for this exercise, for this part. So I think we're going to take a break. Danny, if you can give us, I think, 10 minutes, because we started a bit late. 10 to 15. 10 to 15. What's the mood in the room, Danny? 10 or 15?
Yeah, I'm not too sure how much more and how the timing goes.
Warren says 15.
Warren's saying 15.
Well, yeah, I gave Warren too long answers, maybe. Too much to think about. Okay, let's go with 15 then. Okay. So I'm gonna be quite precise just because we've only got the 3 hours and there's still a bit to get to. So it's now on my side 2:11. We're starting again 2:26. Okay. All right. Thank you. I'm gonna stop sharing. So yeah. This,
Louis, I don't know if you're talking to us or you're talking to the guy. Okay, you've shared, stopped. Okay. Yeah, it's 25 past. You want to start sharing your screen and video again? Sorry, Louis, just want to pause it. I just realized you maybe when you're sharing, you need to allow sound because it's not sharing the sound. Settings.
Wait, sorry. Again, that's that again. Okay. Do I need to show video? Okay. Would you able to see it, Danny?
Okay.
When I played it now, were you
So we
able to
were able
see?
to see it, but when
Okay,
we
just not the
share,
sound.
there's a little
Perfect.
option that says
Perfect.
share sound. Okay,
Oh,
because
okay. So let me. No, wrong
when you
one.
share your screen,
Yes.
it's from the start. It's got little on the opposite, little on the on mine. It's on the right hand side. There's three little tick
Oh, I
boxes.
see it.
There's a little
Thank you.
tick
Okay,
box. You
I
have to
don't have
share
that option.
sound.
I don't know. I don't. It's grayed out. It's
Yeah, I don't know
grayed out on
why
my
it's
side.
not. So I don't know
It's okay.
why.
Let's try this. Let me play a few seconds. Let me play a few seconds. If it works, great. If it doesn't, I'll send you the link and we'll do it after the next break. It's not an issue. It's not a problem. Okay. Let's give it a crack. We can see. Maybe it does work. But if it doesn't, then it's fine. Okay. Let's see. And I think just stop as soon as you hear. As soon as if you don't hear the sound, then let's just leave it.
No, I'm not hearing it.
Cool. Okay. Then Daniel, then what I'll do is we'll share the link. I'll share the link with you. I'll ask Karabo to share it with you, and then let's we can do it after the next break. Let's do that. That's fine.
Okay.
We can just continue where we were. I'm ready with the next part. Okay. So all right. So here's our valid statement. All right. Now, yeah, I'm pardon it's in Firefox now, guys, but let me just go back to the slides just to give some context. There's not right. So, okay. So, hodl or not hodl, those of you, all of you probably know what it is. Hodl is, of course, the phrase they use in crypto when they, for, whether you should hold or not, they switch it around. Yeah. So, okay. So I'm going to touch on this I'm going to go very quickly through the slides so we can move on to the value statement, which I think, and we can use some, you do a little exercise. So yeah, and I guess we've touched on this. So, but mainly if the crypto is held as a capital asset, right, you're looking at your base cost and your proceeds. Proceeds refers generally to the sale price. But if you're changing crypto for crypto, if you're not receiving cash, then obviously you're looking at the market value. Typically, it's the market value. And there are some very detailed provisions in the eighth schedule to the Income Tax Act, which deal with calculation of proceeds and that. But in most cases, you're unlikely to fall into any of one of those complex ones. So, like I said, your maximum effective rate is 18%. Of course, we say that because the top bracket is 45%, and your inclusion rate is 40%. They didn't increase that in the budget. So 45, 0.45 times 0.4 gives you 18. So that'll always be the maximum. So if you actually go and work it out from the lowest to the top bracket, I think you start around 7.2 and you end up at 18. And of course, you've got your increased threshold now. I think which was announced in the budget. I can't even remember the exact amount. But of course, now you've got your exempt capital gain threshold was increased. And yes, like I said, so generally it's applicable if it's held as an investment. There is, of course, maybe just to touch something on that. It's usually a facts and circumstances test, but there is a view that if you look at a section like Section 9, capital letter C, that whether if you hold it for more than 3 years, does that constitute, is that long enough? So you can use it as a rule of thumb. And I think in most cases, if a person holds an asset for more than 3 years, I can't say definitively, definitely not. But you would have an argument. You'd have a good argument to say that the gain is capital in nature. So your tax is maximum 18%. So this is your guys are holding crypto for a long time. Maybe you're early investors and that kind of thing. So that's on the capital gain side. On revenue account, as we discussed earlier, it's applicable to financial instruments. Like I mentioned, the rules for financial instruments are similar to the rules for shares. Also, like I said, it's not treated as trading stock. So you're not subject to the trading stock provisions where you have to calculate your closing stock, opening stock, and that. And of course, the test, in which has been set out in cases over the years, several cases, is the intention to trade as part of a profit-making scheme. I've shortened it there. The purists in the room, I will admit that it contains that's 99%, I would say, correct. But it must be part of a profit-making scheme. That's the thing. It must be you are trying to make money from it. Okay, make a living from it. So I wanted to do an example, which I thought would be nice. And sorry, I realized I ended up slideshow mode, but I'll switch it on now. There we go. Okay, so I just want to switch back to my. There we go. All right. So, I said, thanks to Vala for sharing us this template statement. So, Warren and Oscar, this ideally is what your client would like, something like this. So here you can see this transaction history shows what this person traded, and there was all buys. There you go, on 8 and 9 Feb this year. And you can see there, so maybe we start, so there's the fee that Vala charged. Credit, that's obviously the amount that was, what is it? That was bought, sorry, that's the one purchased. That's the amount that was expended for the purchase. Okay, so Bitcoin, XRP, I forgot, I'm sorry. ETH is Ethereum, SOL is, I think it's Solara. For those interested, Donald Trump's former spokesperson, Anthony Scaramucci, he often has spoken about the Solara being maybe a good they may be a good crypto asset to look at. But if you're now engaging with SARS, back to our tax matters, if you're engaging with SARS, this table this is where the magic happens, our debit table, because that reflects the expense that was incurred. So if we go back, I'm going to jump between our slides again. If we go back here, I'm just going to say slide, right? Okay, so unfortunately I can't share two screens. Okay, but the base cost, that's the buy amount, right? But the base cost is the buy amount plus the fee. That's an important one to bear in mind. Plus the fee, like I said, plus permissible expenditure. So there's a whole long list of additional things you can add. But it's paragraph 20, if you want to make a note of that, paragraph 20 of the 8 scheduled capital gains. Paragraph 20 of the 8th schedule to the Income Tax Act, right? So that's where you have your whole list of the permissible expenditure that you can add. And it's important because that can often make the difference between it can decrease your gain. So those are important to also keep track of. Okay. Same thing if you're buying that on revenue account, that's your purchase price. The same thing, your expense incurred. And I think I can't. Generally speaking, your fees are also you can add them to your purchase price. We don't call it the base cost. It's maybe it's just your purchase price. That's probably the best. I don't think the Income Tax Act uses a specific word because it's not trading stock, of course, as you know. But it's basically the value calculated based on purchase price plus expenditure incurred. Yeah, that's probably what you would use. Paragraph 11, section 11 of the Income Tax Act. It's about expenditure incurred, which is expenditure you can add. So that'll be your text, section 11 of the Income Tax Act, and the provisions specifically applicable to financial instruments, which we're not going to go into detail too much now. And like I said, shares are your base barometer to use because share trading has been around a lot longer. There's probably more crypto trading happening, especially amongst younger generation now than share trading, but it's really the same principles that apply to shares. Okay, so what I'm going to do, I'm going to go back to just in the slideshow. Here's this option in the show. There we go. Okay. So what I'd like us to do, and maybe we can just do a quick exercise. I'm going to just put it up in the chat. Just a very, very quick one. If you can calculate, so maybe I'll just read it out for the sake of time. So let's say that let's just switch this around quickly. So let's say that on the 8th of February, there was this buy, and let's say this was a sell, right? So this was a buy, and the top one on 9 Feb, one at 9:32, that was a sell. It's less than 24 hours. Can I ask that you please calculate maybe let's just do the calculation. Maybe I'll show it, and we can, if someone wants to put up the answer, they can do that. You're going to be much quicker than I am. But the calculation would basically be, and this would be on this obviously be on revenue account. If you're buying on day 1, selling on day 2, it's on revenue account. Okay. So what would be the calculation? 1, it would be your debit, your expense incurred, 299 Rand. You can round the cents down to the second decimal, doesn't make a big difference. Okay. All right, and it's 0. What is it? 0.00026 Bitcoin. You can add your fee, right? But I think actually they've already the old debit is there, so Vala has done it for you. Okay, and then now you are selling, right? Now you are selling this amount of Bitcoin, right, on this day. So I wonder, can someone try and work out I'm going to give it 1 minute. I don't want us to take too much time. Maybe someone can work out what was the cost of Bitcoin here versus there, and then we can just see what the profit would have been. So that's the thing on the sale. We have to pay attention to how much Bitcoin is actually sold. So for purpose of this exercise, let's just assume, just to keep it simple, let's just assume that they're only selling that amount of Bitcoin. Okay. So they're not selling everything. So they bought only 0.000026, etc. And they're selling 0.00004, etc. Okay. So if you guys can maybe calculate what would have been the gain or loss uh, on that. So we can assume that this amount of Bitcoin was part of that one. You see that's lower. That amount, part of this one. Right. Okay. So if you guys can, I'm going to give you a minute. It's 14:41. Yeah, maybe let's give until 14:45. Let's give 4 minutes, and then if we can just have some hands, Warren, if they tell you that if you get a sense everyone is done before 14:45, then I'll continue again. But we'll give until then at least for people to just do that calculation. Okay, I'll try and put up in the chat in that time for those who maybe didn't follow. But I hope it was I've explained it enough. So it's all we're changing is this is instead of a simple buy, this is a simple sell. That's it. Okay. Just mute. We have 1 more minute. There's checking something on my side. Email me. No, I guess not. Yeah. Okay. No, do not want that. All right. I think, interest of time, I think let's go. I had to go with the fee to rand. Yeah. So you use the same. You use the same rand amount on the day. So maybe what I'll show you quickly. I'm going to just show it. We can then do the breakdown. Okay. So what you'll do, right, is so here you can just find the rand price online, nice and easy. Type on my pocket. Okay, and then you sort of use the 6 month one. So I found it. So 9 Feb. So that was there was the price. So 9 Feb. Sorry, 9 Feb. It was higher than 8 Feb. Okay. So what would have happened in this case is that on that amount of let's go back to our screen. Yeah. Right. On this amount of Bitcoin, which was purchased on this day, there would have been, again, mine works out to 49 rand. That's what I get. If I use that, if I use this value here, I use the daily price of 1128575.88. So I get something along the lines. You can just throw it up here, but I get something along the lines of about 49 rand. But I think I used it. Which day did I use now? I think I used. So I should use 8 Feb. Sorry, 1108097.41. 8097. 8097.41. Okay, right. That would have been here's my purchase price. Let's blow this up quickly. That in my purchase price, sale price, and then of course, yeah, actually you should actually include that. I'm going to just use it now because I'm not just to save a bit of time. I'm not going to include the fee now, but you would normally include that. Okay, so you end up with. I'm just going to go back there. End up with. Will you sell now? Oh yeah, that amount. Let's assume this one. There was probably intraday movement, but let's say this was the sell. So 48,9943. Copy. Sorry. Sorry. Here's my Excel spreadsheet there. Right. And if I put this, it looks like, at least on my calculation, it would have been loss, a small loss of 60 cents. Okay. Can I get an idea in the chat? Someone else, well, if you agree with this, and maybe what did anyone get who was able to factor in the fee also? Maybe you can share that amount with us. Like I said, like I said, so we'll just say valid example. Let's say purchase price on 8 Feb was 48.38. Yeah. And sale price on 9 Feb is 48.99. The loss of 0.60, give or take. Okay. Can I get some indication just whether people understand that? Danny, if you can just test the room and see Warren, Oscar, anyone else, if you can say that makes sense. Yeah, you'd apply the same principle of the fee. So you'd add it in both cases. So remember, because the crypto is not currency, you've got a fee on both sides. So you can add both fees. So you can take that into account because you're engaged in a scheme of profit making. It's like if you want to think about it like this, crypto, if you buy something with crypto, it's a barter transaction essentially. So your principles of barter apply. Yeah. Can we just get some indication in the room if everyone's sort of if it makes sense? Because if it doesn't, I don't want to. I think it's important that at least we have one example that everyone makes sense to everyone. If the calculation's the issue, I'll just set it up again. Danny, you still there?
So I'm here. I'm just I don't know if anyone's got any. Are they managing or not?
Okay, it's accountants. Maybe it's a bad question on my part because they are better at this than me. So everyone in the audience really is. You saw our slide was with Excel. So okay, I think everyone is happy with that. So and maybe back to Oscar and Warren's questions. I think if you have this, it's obviously a lot easier. It's a lot easier. And the last thing I'll say before I move off, I mentioned that the daily price on a specific day, you can find it online. Here it is. You can just simply track it like this. So if this is all you have access to, you just do a screen grab, like Warren said. So you can just if you have to get on a specific day, you just get this, blow it up. If the exchange has the data for that specific transaction, obviously that's easier. That's even better. But if you don't have that, then you can just use this chart. This is, I'm not sure which website this is that provides it, if it's Bloomberg or what, but this is. If you exclude the fee, the sale prices are higher than purchase price. So the way mine worked out was my purchase price was. Oh, geez, thank you very much. You're quite right. Sorry. You're quite right. I made a mistake. You're quite right. Thank you for that. Thank you for that. Let me change that quick. That's positive. Thank you very much, George. Thank you very much. I had a bit of a brain. A bit of a mistake there. Great, there we go. Yeah, thank you, George. I agree with you. I agree. So it sounds like the fee, those who did the fee. Okay. Yeah, I'm going to just mention this for everyone's benefit. I'm getting a notice here. This Fireflies AI note taker says attention. Recording will stop in 2 minutes. You can re-invite to continue recording. Danny, is that going to affect us? Okay, Danny, I'm going to continue.
Sorry about that.
See in the
that
chat
shouldn't be on my side. I don't know who the note taker part is.
Okay.
But on my side,
Okay. Sorry, go ahead. On your side?
it shouldn't. Mine shouldn't have a delay, but now.
Okay. Look, let's continue. As long as you're aware of it, I think it's fine. Okay. All right. That's it. Okay. I think let's go back. Right. So maybe this is a good part. I can jump a bit forward in the slides. I say slideshow. Maybe I'm just going to jump forward here quickly, guys, just because we're on it. Record keeping. Might as well, if you touch on these things. If you don't mind bearing with me, this is to assist. This is to assist. So I've spoken about the burden of proof, section 102. I think I'll leave it at saying let's work on what we discussed on Warren and Oscar's examples. That sort of that approach can inform what you provide SARS with. Information from exchanges, like we saw now. If you've got this valid statement, that's very, very handy. Other forms of proof, like I say, bank statements, any other documents that pertain to the transaction. Screenshots are great, graphs are great. Okay. Missing or incomplete data. Missing or incomplete data. We put that in to say perhaps you're in a situation where your client does not. Let's use the Valor example. They don't have a statement like a Valor one. They've got to use the screenshots and screen grabs like that Warren and Oscar were referring to. So if they're using that, then that's what you use up until that point, and then of course you continue. And I think missing data. If all else fails, you can try an affidavit. I mean the point is. I'll say one thing about this. If your matter goes to dispute, just bear in mind, okay, there are cases on this, that if SARS is going to estimate the assessment, it should estimate the assessment. In other words, they say that they estimated because you weren't able to provide it. Then in that case, they bear the burden of proof that the estimate is reasonable. So they must prove it. So what you would practically do if your client is not a multimillionaire and SARS is trying to say that that they are based on the assessment issued, then you can provide information in support of that. So if say the full extent of their assets or whatever the case may be. So SARS bears the burden of proving. Those cases are difficult, the estimated assessment ones, because SARS carries the burden, but they sort of want to say you should prove it, and that Lutsky case dealt with that. But the main thing, I think, like I said earlier, bona fides are the important thing. Give what you can as early as possible. That's the best thing you can. So, as I mentioned earlier, SARS identified crypto as a high risk focus area. We'll send the press releases afterwards. There was a press release that came out, I think it was 2025, 2024, that spoke about SARS going to be focusing on this. And one reason, which makes sense, is that there's a very high amount of crypto use. George, should the platforms that no, I'm raising one. Sorry. Where's George's question? George. Yeah, I mean, George. I mean, I think everyone agrees with you. They maybe should. So I think. I mean, if you think about it, if the clients are concerned by this, by the then maybe they'll go to a platform that offers them, that information more readily. But that's a good idea. I think it could happen. One thing I might mention also is that because of the regulation, because we've got far greater regulation of crypto now, so we've got something like I think 300. They're called CASPs, crypto asset service providers. That information is very reliant on that. Yes, no, I agree with you, George, completely. It is very reliant on the data that you have. so that's why it is sometimes it is a bit of making the best of a difficult case. But I think it's perhaps a question maybe, and I confess I do my own tax returns, but I don't really do other people's. And so, but maybe a question for accountants, maybe something to think about. I have heard when we've had I've engaged with accountants, so sometimes they've got a very complex case, and they want us to assist with a dispute, for example. They would come with the client, and you sort of help them. And I have seen some accountants. What's nice is they do like a questionnaire. So perhaps that's something that you can use if you have a client that, especially, and I mean on this they're going to pay provisional tax. So maybe if you have, maybe that's something to add in your questionnaire. If you check in with your client every month or every 2 months, or when you do their next provisional tax return, maybe look into that. Maybe ask them, have you traded in Bitcoin during this period? Engage with your crypto asset service provider to try and see if they can provide you with that information sooner rather than later. So that might be something to do. I think, yes, if it's in the legislation, that would be great. And I think we are going to move towards that with third-party data. There's already those provisions in the legislation, like I said, with the banks. The typical example is your IT3B. So IT3B, IT3C, or RP5, that is all based on third-party information, which shows the interest and that. So I know, for example, a platform like and I completely forgot the name. It's the Popular Share Exchange web platform. I forgot. But they give you a statement and they say what your profits were for the year. And they provide that form that they issue, or I will use myself. So I've done a lot of trading with Standard Bank on shares, and the Standard Bank would at the end of the tax year issue me with an IT3B or C or whatever, or one for interest, whatever the case may be. But those are indicative of third-party data exchanges, and I think we are going to move there. I suspect we'll get there in the next 12 months. 12 to 18 months, I'd say, because South Africa is a signatory to an international information exchange protocol regarding crypto. Short word is the COF. So I don't know, George, who provides the best, which platform provides the best transaction data. I don't know. I think what we will do, we'll talk to the team, to my colleagues decide and see maybe. Perhaps, we only had time to speak to Vala. We would have loved to speak to other exchanges if we could, but maybe this is something to raise with the exchanges. Maybe we can provide some contact information. So we'll look into that, and we'll see if maybe there's a contact person at each of the exchanges who can provide that. I mean, I would imagine that. Luno, OVX, which I think are the biggest three. Luno, OVX, Vala, I think they're the biggest three. I speak under correction. But I think they would all be able to provide you with a statement like this. I'd be surprised if they're not. Because the funny story was actually we got this transaction statement because we actually didn't ask for a transaction statement from Vala. We asked them to come and explain to us, to show to you how to do the Coinly integration. Because we'd actually found a link online which shows Coinly and Vala. When our contact at Vala got back to me, he said, no one has a Coinly account. And then I said, well, can you give me a transaction statement? And so he did. So I presume they don't have the need for it. So I think maybe look at the individual websites, but we'll see if we can find something. Maybe if we can find one or two exchanges, then we can maybe provide some contact details. It's in their benefit too. I think they also want to have a good relationship with regulators. So thank you for that question, George. I think it's given us. We'll look into that and see if we can share something afterwards. I've touched on the exchange of information, potential penalties. I think I'm going to come back to that one just because. Maybe I'll touch on it quickly. I think all of you know about this. 2-3 types of penalties. You've got for non-submission of return, there's administrative compliance penalty, administrative non-compliance penalty. It's typically on a month-to-month basis. But crypto specific, what will happen is your exchange, it would be if there's a provisional tax issue, those penalties. Otherwise, your understatement penalties, which vary from as low as 5%, depending on the facts, up to as much as 200%. And I think in the Lutsky case, which is probably the case that's most similar, or that can come across, or that you can find that might show itself up in the. Let me phrase it better. The Lutsky case, I think, is an indicator of what can happen if SARS doesn't order a comprehensive audit on someone, and they don't all have all the supporting documents there. So it can get as high as 200, but good faith, like I said, always even if you have an auditor who at the beginning, who might be very strict and just impose a penalty. As these matters move up, and I'm sure many of you have experienced this, as these matters move up, you get more experienced people involved. Even in the years where I can say from my own experience, even in the years
you've lost signal again. I don't know. Can't hear you.
Okay, let's just give it a moment. Can you hear me now? So our internet connection is fine. There's still data and everything, right? Danny? How's it now? So I have no indication that that my connection is weak. Oh, it's that phone, maybe. Is it fine? Okay, George says he can hear. Okay. All right. If there's someone who can't hear, just let us know. I don't want to see myself on the screen here. That's when it comes to penalties. Okay, so I'm going to go back to the previous slides. I'm going to maybe go a little bit quicker. I think we've done quite a bit of capital V revenue. I'm going to be very quick with this. Intention we've discussed. Frequency is going to be an indicator. I've mentioned the 3 years holding period. Use of leverage relates to debt. Obviously, it could be an indicator if you are loaning to buy. So in the arbitrage, for example, that was one of the issues that one of the concerns that was picked up was that there were people borrowing money to then buy and do the arbitrage. So if you're using leverage, that's usually an indicator of it being for profit, but always a facts and circumstances case. I think that the example always, because of facts and circumstances, or one of the good examples is a case, Capstone, 2015 or 2016 that came out, and interestingly enough, it actually involves a lot of the guys involved in the Steinhoff debacle, which is obviously very unfortunate. A lot of pensioners losing a lot of their money, where they were able to they used Capstone, I think, was this special purpose vehicle that they used, and they were able to argue successfully that certain profits were actually capital in nature as opposed to income. So there are cases where it could be arguable. I think crypto is probably the closest thing to black and white, I would say, when it comes to that. It's sort of very clear, unless you've got a long-term hold, maybe. But I think what we see most in what you'd likely see is SARS is going to argue for revenue, and you're going to have to prove why it's not. So if you go capital, you need to have your ducks in a row. Okay. Okay, I'm going to go ahead and the questions can come as the way they have now. That's fine. Our next section. Yeah, no. Okay, we just had a break. I think I'll come back. Maybe 5 minutes. Can we do a 5-minute break, or do people want to keep going? The next part is interesting, and then let's see if we can get that video working, Danny. We can send that to you. Maybe a 6-minute break until 1:15. Is that fine? For everyone, I'm mindful we have to finish at 4, and I'm not running over on the day before your long weekend. Definitely not. Danny, can we do that just until 1:15?
Yeah,
people
sure.
Can stretch legs quickly. Thank you. All right. Oh, it's just unmuted there. Camera. Welcome back, everyone. Danny, can you hear us?
Yeah, I can still hear you.
Oh, wait, my sound. Sorry. Okay, Danny, can you hear me now?
I can hear you. Can you hear me?
Yes, I can hear you. Okay, great. Okay,
Yeah.
let's. So I think what I'm going to do, everyone, there are three slides to cover. They're quite short. So what I'd like to ask is we're going to push until I'm going to try and finish the slides by 1:45, and then the last 50 minutes are just questions. So that's what I'm going to do. So Danny's going to start it off with the John Oliver video, and then we'll take it from there. Okay, Danny, over to you. I think he's playing it to them, I'm guessing. I can see. No, I just can't see.
So I thought we were carrying on, and I was going to play the video afterwards. Let me get it loaded.
Oh, sorry. No. Let's do the video just so everyone, just to get some. It's a nice context for this. Nice context.
Okay, because I need to get back into it now.
No, all good. Sorry about that.
That's actually. Sorry, I'm actually now the setting I had it open is not finding it. Let's carry on. Sorry, this system is being very difficult today. Or let me just stop your sharing and then see if it will work again. Sorry. Can you stop sharing your screen and then let me share mine? No, it's not letting me share sound. Sorry. I don't know what Zoom's problem is today.
It's fine. It's okay. What we'll do, we'll just share the links with everyone afterwards. We had a nice little video about forking. Maybe I'll show the first minute because it's not going to be as nice without the sound, but maybe I'll give that a try. But let's quickly talk about maybe we should talk about these now. Let me try and make sure the video last. Let's finish off with this because this is more interesting. Okay, so right. This is an important one. Interaction between SARS and SARB. So the reason I put it in is because even though the Reserve Bank is not responsible for tax, we touched on information exchange between jurisdictions, countries, and what's coming in terms of the common reporting framework for crypto assets, CARF, next year. But an important thing is that the Reserve Bank. Oh, sorry, George. Sorry, I didn't share. Excuse. Thank you. Sorry, I'm acting like someone who's about to go on a long weekend. Sorry about that. Okay, I'll start again. Exchange control is important because SARS and SARB share information. So in the Tax Administration Act, there's a provision in the section that deals with taxpayer confidentiality, which says that one of the exceptions to taxpayer confidentiality is that SARS can share information with SARB, which allows the SARB to fulfill its function, which is to enforce exchange control, and vice versa. Under the South African Reserve Bank Act, the Reserve Bank can share information with SARS so that they can fulfill their function. So there's a difference. So SARS collects tax, right? The Reserve Bank doesn't collect tax. They have really what to call a regulatory power. There was a very famous case involving Mark Shuttleworth where they decided that. So they can regulate. Their purpose is only to regulate. They can block funds and that, but they can't tax. but it's very important because as we move into this age of information exchange, it's going to happen. I think we have to accept that authorities are going to have a lot more information than they previously did. We can go into the privacy concerns later, but one has to be ready for that. So we have to be aware of the fact that if the SARB has something, SARS could have it. If SARS has something, the Reserve Bank could have it, and that there is going to be cooperation at that level. A very interesting point. Maybe two things on the exchange control to mention. The first is that last week, and it's been in the news a bit. Last week, you may have seen that they released what's called was it 2 weeks ago? Yeah, they released what's called the Capital Flow Management Framework Regulations. So these are supposed to replace the exchange control regulations from 1961. Won't get into the technical aspect. For crypto, what's important is that they want to strictly regulate crypto. Standard Bank won a big case against the Reserve Bank last year. That case is still due to go on appeal to the Supreme Court of Appeal at some point this year, I think. But Standard Bank won this case that said that under the current exchange control regulations, crypto, the Reserve Bank can't seize crypto. They can't issue blocking orders and forfeiture orders for crypto. So what they've done in these capital flow management regulations is they've now tried to strictly regulate crypto. Maybe something interesting that we'll consider sharing is that, when I was on the Valo website, I saw they actually had a page on their website which discusses this, and you can click and submit comments. So if you want to do a bit of civic participation, you can even do that. Allowances, I've mentioned the 1 million rand allowance for the arbitrage. That's what that refers to. And I've touched on exchange of information. But it's important to just be aware of that because authorities can share information with one another. And one thing I didn't mention is that in the budget, so we all watch the budget speech. The actual budget document runs typically into hundreds of pages and has various sections. Tax people will tell you that, or tax people like yourselves and other tax practitioners will tell you that typically Annexure C and Chapter 4 are what they look for. That's where you have your tax proposed and tax data. There's a comment here. Sorry, Stan, I'm just trying to open. They are. Thank you. Thanks a lot, Stan. That's exactly it. Thanks a lot. You're making our lives easier. The draft capital flow management regulations. For those who want to look, have a look. It's current date for comments is 18 May. But in the budget, it said that there's a section, Annexure E. Annexure E is about financial sector regulation. So one of the things it deals with is grey listing, which I'm sure many of you have come across. We had this big grey listing issue and it affected investment and all of that, money laundering, and we're off the grey list, which was a big achievement. And what the budget says there in Annex E, it says they deal with a bunch of proposals to amend the exchange control rules. And one of the things they say, very interestingly, is they say that they are looking at closer cooperation with SARS and the FIC. The FIC is the Financial Intelligence Center, for the purposes to help detect tax avoidance and money laundering. And that they are definitely going to do. Something maybe interesting that I can mention is that last year at the Tax Indaba, and I would say even if you guys are all accountants, I think if you do tax on a regular basis, it's a great event to attend. I myself, I'm an attorney, so my main governing body is the LPC. So not trying to punt for site for anything, but with site, with the Tax Indaba was a great event for also give you CPD points. And at last year's Tax Indaba, for the first time, they had the head of this department that administers exchange control, which is called the Financial Surveillance Department. The Financial Surveillance Department. Oh, thanks, Danny. There's the video for those who want to download it. That's John Oliver one, yeah. the Financial Surveillance Department, that's the department responsible for enforcing exchange control. And they have a new head who was appointed last year. He came to the Tax Indaba and spoke there. And I must say, he's quite an intelligent individual. Guy by the name of Olano Makubela. Was the first time that someone from the Reserve Bank had actually ever come to speak about exchange control. Many invitations were sent in prior years, and this was the first time that he came. And maybe some context for those who are interested. Best compliment I can give him is to say that a couple of years ago, you might remember that there was a proposal. Government wanted to do something called they wanted pension funds, wanted to force pension funds to invest in government assets, government projects. And so the term they call is prescribed assets. Prescribed, Afrikaans voorgeskrewe, prescribed assets. He at the time was at the FSCA, the Financial Sector Conduct Authority. They are the ones who regulate crypto generally. So the crypto asset service providers are all registered with the FSCA. So the CASPs are registered with the FSCA. And Olano, he was with the FSCA, and he was actually the person who's quoted public information in the press who said we should not have prescribed assets. So what that tells you is this is someone who's independent. So someone who's independent means that they take their job seriously. And if they say in Annex E that they're going to work with the FIC and the SARS, I think they probably are. So that's something to mention. Something just to be aware of is that I'm not always a fan of this phrase, there's no place to hide, because it makes it sound as though SARS is looking for you everywhere. But you need to have your ducks in a row. I think that's you need to have your ducks in a row, because the authorities can work together. They've got the powers and they will use them. Okay. All right. So I've done this one. I want to go. All right. To the trading and investing one. Okay. There was a very nice video we had. I'm not going to play it now. I think Danny will also put it in the chat about forking. And maybe that's a good website to look at, explain all the different things. So I'm going to just quickly go over these. I'm not going to go into too much detail because I imagine obviously the education around crypto is increasing and people are trading on a more informed basis. But I think that most people who trade are not going to encounter all of these transactions. So trading and investing, we've discussed. Mining income. If you're mining crypto, it's always income in nature. Always, always, always. There's no doubt about it. If you've mined it and you hold it and sell it later, the secondary sale could be capital or revenue, but the initial mining is income in nature. Okay. Staking is quite complex, but basically, yeah. But so I'm not going to go into detail in that. Staking is something that is quite. I think staking is used actually for Ethereum specifically, but staking typically the principles are similar to your. It's similar to buying and selling. Similar to what we did. Similar to buying and selling. Airdrops are basically like a donation, promotional rewards. So they would usually be income in nature. They could be capital if you're holding it as a capital asset. NFT sales, like I mentioned, they treat it very much the same. Like I mentioned, that first video on YouTube, NFT sales, it's exactly the same calculation we had. We've covered that. DeFi transactions are very complicated. I'm not going to go into those now. But basically, DeFi relates to finance transactions using the blockchain. So it's going to become a more popular. There's a lot of CASPs pushing for this to use technology, blockchain technology, for DeFi to help make it easier for lending purposes typically. Because on the African continent, for example, South Africa has got a very, very sophisticated financial regulatory framework and institutions, and that unfortunately the same is not in place on the rest of the continent. So DeFi is something that can become more popular there. And then I'll just say with the point of a normal tax CGT, like we discussed earlier, a transaction can have all the potential taxes. Well, I'll just touch on donations tax. Just to remember there, if you are donating, I think this is an important point. If someone's donating, I mentioned earlier the example of the trust. So if you want to get your assets, if you want to get your crypto into a trust and you donate it, then the donations tax, you could be liable for donations tax and capital gains tax, or you could be liable for donations tax and income tax. There's a case, and I forgot the party's name, but there's a Supreme Court of Appeal case where this happened, where an individual went and sold this case to a trust, and it became quite a messy dispute. He sold a mining right to a trust, and valuations weren't done properly. And what they argued is, they said you can't make us pay donations tax and capital gains tax. But the court said yes, because the principles are different. So donations tax here, capital gains tax there. So that's an important one. For donations tax, you've got this 100,000 rand threshold, so 100,000 rand allowance, which you can annually donate without paying donations tax. But after that, you pay. So if you have a client who's thinking about funding a trust by donating Bitcoin, well, by donating crypto assets, they must be aware of the fact that they could be on the hook for donations tax and income tax or capital gains tax on that. Okay, we're good on time. Right. Yeah, I'm going to finish a bit earlier, and then there's more time for questions, and we can go back to certain things. The voluntary disclosure program. I think probably one of the most voluntary disclosure, I think, was probably, if we had to pick a word, what was the previous commissioner's favorite word to use in, and I said it's the compliment. It's not at all. It's meant in a positive way. He often spoke about voluntary disclosure, and he's right. If you're, and this is even for other VDP, if you're non-compliant, become compliant under your own volition. Don't wait for SARS to come. Like I said, there are limits. You don't have to tell SARS everything. There are limits. But rather get your house in order before SARS forces you to do so. So the VDP is long established now. You can call it tax amnesty too. It's in the Tax Administration Act. There are certain requirements that have to be met. I'm not going to list them all here, but the key requirement is usually the one around two requirements have been found to be quite contentious, and that's the requirement regarding, maybe I'll touch on three. One requirement is the requirement regarding making a full and complete disclosure. So there was a case involving an entity called Purveyors, which had a customs issue. And what happened basically is that SARS became aware of a default. Default is just an understatement or non-payment of tax. There is, again, detailed definitions. I'm just explaining at a high level. But there was a default, and SARS became aware of it because of the customs process. What made that case interesting, and it has changed since then, is that there used to not be a VDP for customs. There is now. They brought in, it came into effect now. So there used to not be a VDP for customs. So what happened is that through the customs process, SARS became aware of it. I think the taxpayer also asked SARS a question. They then applied for a VAT VDP, which was rejected because they said it's not voluntary. SARS said they already knew. So voluntariness is often the important one. It's about, I suppose you could say, it's about who makes the first move. But what the crux of the case is it elicited? Is your decision of your own volition, of your own free will, or is it because SARS somehow induced you to do it? Okay, right. So that's the voluntary one. Then full and complete disclosure is very important. Also, this is also one that's a bit, the debate or the contentious issue sometimes comes in with prescription. The prescription basically is about how far back can SARS go when they audit you. And so often what happens in the VDP context is there's this discussion. So SARS's view is that full and complete means all the way back. So best example I can use is when the 2017 amnesty, the SVDP, Special Voluntary Disclosure Program, you had two options. You could either do that SVDP disclosure, where you pay a fixed amount in terms of the specific act, or you could do the normal VDP route, the permanent VDP, those provisions, because your tax would be calculated differently. And one of the things that often came up is how far back people should go. And so mostly SARS would want you to go all the way back to 2001, because that is when South Africa implemented worldwide taxation. So that's another one that can be contentious. And then I made the point, maybe I'll do the second one. Yeah. So you get relief from, if your VDP is granted, you will get no penalties. And you can get a small penalty. If you have a case of tax evasion, I think tax evasion or gross negligence, you can still get a penalty of 5 or 10%. It depends on how the behavior is categorized. So there's a table which basically ranges from you made I forgot the word. It's a bona fide inadvertent error, which is nothing, or sorry, rather a substantial understatement, to intentional tax evasion. So substantial understatement attracts 10%. Intentional tax evasion can attract up to 200%. In the VDP context, if you had a substantial understatement that you are now declaring, you're regularizing, then you'll have no penalty. In intentional tax evasion, I think you get 5 or 10%. But there's a table in the Act, very easy to just check that. So no penalties. You do pay interest. Maybe if the wording is confusing, interest is still payable, yes, but they are proposing an amendment now. They're proposing an amendment where you can apply to have the interest remitted to. There's an interesting case about it. I'm not going to go into it now because I think it's a bit late on Friday. But interest, you can apply for interest remittance also. So, yeah. And then budget 2026, I mentioned that. I think that's those two amendments. So it's the one about the interest remittance that was there. If you want to look it up, it's the Medtronic. It's a Medtronic case. It was the case of the Constitutional Court. I think it was, for those who are interested, I think the judgment was written by Justice Madlanga, who's the Madlanga Commission, which is ongoing, I'm sure, into police corruption. I think he wrote the judgment. But that's it. Oh, and then criminal prosecution. No criminal prosecution. That's generally not so much of an issue. SARS is generally more focused on collecting the tax than criminally sanctioning you. But in practice, they can refer to for investigation, firstly, and secondly, they will do it in cases in industries where they believe there needs to be a strong deterrent. So if you think your gold mafia stuff, like the Al Jazeera documentary that came out, which exposed a lot of things, there was a Gryvenstein case and that which came out last year. Those kind of things, those industries are generally VAT fraud. VAT fraud is very common for criminal prosecution. So if there's someone, I hope it doesn't, want to be in that position. But if there's a client who maybe has done something, in one of those industries, and they want to regularize it, for them that's very, very valuable. The exemption from criminal prosecution is very important. Okay, I think that was our last slide. Yes. All right. So I'm going to open the floor. You can ask anything. I think if you want to go back on something, that's fine. I think yeah, we're not going to play the videos. Okay. Oh, we'll send the videos. Sorry, Carl was telling me we'll send the videos to everyone. But I think if there are any questions, now's a good time to ask them. I was going to ask. Hold on, I forgot. Okay. But if there are any further questions, please feel free. If there's something I might have gone too fast now at the end, yeah. anything you like, anything you want to ask.
Okay, yes, please feel, I hope you can hear me. Please feel free to ask any questions. Just thank you so far, Louis, for the presentation. Thank you, everybody, for joining us. For some reason, the host has taken away my video, so you can't see me. I used to present
Can I
on the
try it again
radio,
now,
and
Stan?
they used to say that I had the perfect face for radio.
Nice.
So thanks. Is there anybody that wants to ask anything? Anything in the chat? Danny, do you want to add anything?
Is there anything on the Q&A,
apologies
Danny?
for all the technical issues. Yeah, I don't know. Zoom was very not cooperative today. Yeah, they always
Yes,
update and they
apologies.
change the
Apologies
system and
for
then
the late. Sorry. Carry on.
yeah. So yeah, sorry. They always update all their systems and they change something and they integrated AI in certain things and it's changed settings that we used to do where we could share videos and things would work smoother. But yeah, our next presentation next month is with Jackie. We'll be getting all that set up and sent out later next week. And yeah, enjoy the long weekend. I should hopefully be able to relax a bit after all this information.
Yeah, it is a lot. I'll say one last thing, Danny, sorry, just before people go. So I've put in the chat, if people want to have questions afterwards, they can just email us. Like I said, we'll email the videos and that. And if there's someone who's interested, so the textbook that I wrote, that's the chapter is part of, I must concede, I was the co-writer. My previous boss at another firm, he was kind enough to allow me to co-author the chapter with him. It was three of us, myself, one of the other team members, and him. And but if there is someone who's interested, it's a very thick book, and it deals with so it's a country by country breakdown. So if you're like a crypto, like really interested, it's a good buy. But when I last checked it cost a few €100, I think. I'm not exactly sure. So
Can you
if
pay
there's
for
someone
it
who's
in
interested,
crypto?
say again.
So can you pay for it in crypto?
So you probably can. I must say the one editor, the editor is a guy by the name of, and what I'll do is I'll share his LinkedIn page. I think we can do that. Yeah, Nicholas Schmidt. He's an attorney based in Austria, and he's also quite good on AI. I think he presents a course on it. So we'll share those details for those who are interested. I'm not sure if you can buy just the chapter. I honestly don't know if that's possible, but yeah. I thought I'd just throw that out there. That's a nice. The book it's nice. It's like a question answer approach. So it covers a lot of what we mentioned today. Okay.
Okay, so just to recap, we'll be sending out the certificates a little later. Also, Danny will be sending out the video that we've been waiting for the whole afternoon. So we'll watch it. You can watch it at your leisure. Because tomorrow's a holiday, you can have the rest of the week off. I don't know if those of you are going to work on Workers' Day anyway. But I think it's time to wrap up. I don't know if anybody else has anything. Danny, do you want to add anything?
I don't have anything on my side at the moment.
Louis, anything, last words?
Okay. No. I was gonna say, well, watch this space. I think really, I would encourage people to. We're going to send that link. Have a look at the capital flow management stuff. Understand and make sure you understand, because those powers that they're going to be given regarding crypto is going to have a definite implication. So if you have clients who are genuinely invested in this, it's in their best interest to engage in the public participation process. I would say that. Yeah.
Just, I have a last question. Just
Sure.
these guys that hack into your computers and they mess up your whole life, they want to be paid in crypto. So how come there's an audit trail on the crypto? So how does that all work?
I think they hide it. So it's harder to get because blockchain works on this principle of wallets and keys. So of course there are these if you find if you go and search the web, you'll find articles about someone who lost the keys to their wallet, and there's like
Yeah,
crypto with
lost millions.
millions of billions of dollars. I mean, if you look at the biggest crypto heist, it must be called the heist. It was actually good last year in the UK. Now I don't know if this lady, and it was a woman. I don't know if she got the crypto, how she got it, but it was uncovered. She was found in the UK, Chinese national, and she was found in the UK, and it was billions of pounds of crypto. So to tell you the truth, I'm not. I think they use blockchain because it's decentralized. It's not as easy to get that information. I mean, I assume that's the case, and I mean, you can carry it like this, almost like a flash drive on these sockets and that. So that's why. Yeah.
This woman did she lose the money, this lady, or did she steal it?
No, I think she stole it. So I think the article suggests that she stole it. I think she. The news reports say that she will share those two. We were actually going to touch on it, but we just didn't get time. I think the news reports say I think she. I'm not sure if she ran a scam or what, but she received the money in China and then she fled to the UK. So
and that's when things went wrong. Okay. Thank you very much for the afternoon, Danny. Bye, everybody. On that note, have a great weekend.
Thank you, Stan. Thank you, everyone. Take care.
Cheers, everyone.
Bye-bye. Bye.